Today we are going to be dissecting the concept of special order. It's part of the scope of short-term decisions. What do you understand by special order? What are the angles to special order? What about the decision rule? All of these are what we are going to be discussing in relation to special order. Okay, what do you mean by special order? When a company is operating below the installed capacity level, the company can undertake special order for the purpose of making additional profits. The special order is a one-off order that usually involves a large quantity of the company's products and is usually available at a price below the company's quoted market price. This special order may be undertaken by a company only if the company has spare capacity to produce the special order. Let's say, for example, a company has 100% capacity for production. Ordinarily, the company can produce 100%, but due to one reason or the other, the company is operating below the installed capacity. Let's say, for example, the company is operating at 80% capacity. That means there's a spare capacity, there's idle capacity of 20%. So what we are now saying is that a special order, which is a one-off order, can come up for the company to produce and then to be able to execute the order. So it is expected that this special order is a one-off order, it's a one-time order, and it is usually quoted at a price below the company's quoted market price. Let's say, for example, if the company's market price for its product is 10 naira, the special order may be available at 8 naira. Okay, so that is basically what special order is all about, right? It's a one-time order that may not occur again. But one thing you need to understand is that the company will only be able to take up the special order if there is idle capacity, if the company has allowance to accommodate the special order. That is only when they will be able to undertake the special order. However, the decision to accept or reject special order will be analyzed critically under two different perspectives. The first one is economic angle, and the second one is the qualitative angle. For the economic angle, it involves the process of comparing the sales value or cash inflow arising from the special order with the relevant cost of producing the special order, whether it will result in additional profits or a loss to the organization. I repeat, the economic angle of the decision to accept or reject special order involves the process of comparing the revenue or cash inflow arising from the special order with the associated relevant costs of producing the special order, whether it will result in additional profits or a loss to the organization. So that is the economic angle. It also means that at times under the economic angle or under special order, examiner may want you to determine relevant costs of satisfying the customer order. All right. So in this case, your focus will be to determine relevant costs associated with the special order. Now, one thing you need to understand is that as far as the special order is concerned, please, on the day of your exam, if you have any question on that special order, you have to focus on the special order squarely. You are less concerned with the company's other activities. Okay? So your focus will be on the special order. What are the revenues that is coming from the special order? What are the costs? What are the associated relevant costs of making the special order? So you are less concerned with any other company's activity because you want to utilize the company's spare capacity to produce the special order. Therefore, how much is the customer willing to pay for the special order? How much as a company am I going to incur to produce the special order? So anything outside the special, any cost that is not related to the special order or any receipt and payments not relating to the special order should not be considered at all. If you want to determine, let's say, for example, examiner may want you to determine minimum price to quote for the special order. So in this case, it has to be only the relevant costs arising or associated with the special order. Any cost that is not related to the special order should not be considered at all. This is the economic analysis of the special order. Just compare the cash inflow, that is sales value, from the special order with the relevant cost of making the special order. That's all you need to do. To do this, if in the question examiner wants you to determine profit, then this is the format that you can use to prepare the economic analysis or incremental analysis of the special order. You go to the question, go and identify the contract price or selling price of the special order, whatever it is, you post. You then determine the relevant cost of producing the special order. Under this, you may be given direct material costs for the special order, direct labor costs associated with the special order. You may be given direct expenses relating to the special order. It is also possible you may be given variable production overhead. You also need to check from the question in case you are given direct, incremental, attributable, specific fixed costs relating to the special order. You indicate it. It is also possible that it may be the company that will deliver the special order to the customer's location. So if this happened, then the company may incur transportation cost or what we know as freight cost. All right. So any other relevant cost that you have that relate to this special order, you have to include it. When you add up all the relevant costs, you less from the contract price or the sales value arising from the special order. This may produce either a profit or a loss. So this is basically what you need to do as far as special order is concerned. Now, what is the decision rule? If the special order will produce additional profits to this organization, our advice will be that the special order should be accepted. But if the special order will result in a loss to the organization, we will advise that it should be rejected. All right. So that is what you need to do as far as acceptance or rejection of a special order is concerned. That's basically what you need to do. Okay? Now, the second part of the special order is the qualitative perspectives. All right? What are the qualitative factors we need to take into consideration in relation to special order? This qualitative factor relating to the special order will come in form of questions. All right? First thing first, you need to ask yourself, as a responsible organization, you need to ask yourself, is it certain that fixed costs will remain constant within the relevant range? Because our assumption is that the fixed costs within the organization will not impact this particular special order. Because whether you produce the special order or not, the fixed cost that the company has incurred, or the company will incur, will not impact. The company will surely incur it. So what we're now saying is that what if the company will incur additional fixed cost in relation to the special order? Any additional fixed cost incurred will be part of the special order. But what we are now saying here is that, is it certain, are we sure that these fixed costs will remain unchanged within the period under consideration? That is the first factor we need to consider. If we are certain that we are going to incur additional fixed costs, then the price we are going to charge, we have to build that additional cost into the price we are going to charge the customer. The second factor we need to consider is that, is there other alternative ways of utilizing the spare capacity instead of the special order? It is possible you may have another way of using it, of using the idle capacity. But all of this we have to brainstorm there must be a kind of brainstorm within the organization, so that they will get the best. They will make the best use of the available spare capacity. Then number 3, is the special order the most profitable way of utilizing the spare capacity? Or with these long-term plans, or will the long-term plans for utilizing the spare capacity be affected? So it is possible we may have other profitable venture or opportunity that we can utilize the special orders for. Okay, the spare capacity that we can utilize the spare capacity for instead of the special order. If you have other alternative that is more profitable, that alternative may be considered instead of the special order. The next factor you also need to consider is that because we said that this special order is always available at a price below the company's quoted market price. So if the company market price is 15 naira, the special order may be for 12 naira. So what we're now saying in this factor is that because we have lowered our price for the purpose of undertaking the special order, so we're now thinking that if we lower the special order, if you lower our price for the special order, can that gesture attract or influence other customers to quote? Okay, to also want to quote for the special order. Maybe they want to utilize the remaining capacity available. At times, out of this, for example, if the company has spare capacity of 20%, this special order may just take about 5% or 10%. That means you still have additional spare capacity of 10%. So because the company has lowered its price for this special order, can other customer because we have lowered our price for the special order, it is also possible that other customer may want the same thing. All right. So, and that is what we are trying to say in this last factor. All right. So these are some of the qualitative factors you need to consider in relation to the special order. Now, as a recap, as far as special order is concerned, we said that we said that when a company is operating below the installed capacity level, the company can accept or not accept special order. And this special order is a one-off order that is always available at a price below the company's quoted market price. So, and we said that the decision to accept or reject special order will be analyzed in two different perspectives. One is the economic angle, which represents the process of comparing the sales value with the associated relevant costs arising from the special order, whether it will produce a positive, whether it will produce additional profit or a loss to the organization. And we said that if the special order will result to additional profit to the company, it should be accepted. But if it will result to a loss to the organization, it should be rejected. Then we talk about the qualitative factors that can arise in relation to the special order. One key important thing that I mentioned is that there are two different ways an examiner can test you in relation to special order. If in the question you are given selling price for the special order, it means that the company wants you to determine profits or loss arising from the special order. But if you don't have anything like selling price or contract price given to you in the question, then it may well be that the examiner wants you to determine relevant costs of producing the special order. So in this case, any cost that is not related to the special order should not be considered. All right. So your focus will be on the receipt and payment relating to the special order only. That's all you need to do. And it's very straightforward. If you understand the concept of relevant costing, then you have no issue. You are going to have no issue in treating or in solving questions that relate to special order. It's always very straightforward. All right. So at this point, let's have illustrations. We are going to test two different illustrations before we proceed to the next topic. All right. So let's move to illustration. This illustration number one is more like a relevant cost. You have to determine the minimum price to accept for the order. So you are going to treat this as an assignment. All the assignments I've given to you so far, including the one I asked you to submit yesterday, all of you did not submit apart from Idrisu. It was only Idrisu that submitted the assignment and he scored 13/15. He would have, of course, scored everything. It's because of his mode of presentation. That's why he lost 2 marks. So you can imagine all the assignments I've been giving to you from day one. None of you, only few of you have attempted it. And this is not good for your personality. I also see the way Mr. Chuaju is following up with you on assignment on your WhatsApp group. Again, only few people usually attempt those assignments. You are not helping yourself. You may think you know it until you face the reality on the day of your exam. All this assignment is given to test your understanding, is to test your competence, is to get you prepared for the D-Day. But if you keep on skipping assignments, you think that you know it. I pray that it will not be too late before you realize it. Please, you just have to change. This is not the first time I'll be telling you this, but you keep on repeating the same mistake. So I'm giving you another assignment now. The one I gave to you last week, you have not done it and you have to do it. This is the second, I'm giving another assignment now. This can come below question on page 37, illustration number 1. Solve it as an assignment and you have to submit not later than, I give you 1 week. Between now and next week, Thursday, you have to submit. Okay, that's your assignments. Now, we are going to do illustration number 2 and 3. So let's start with illustration number 3. Yes, Mercy, talk to me.
Sorry, sir, I didn't get the page. You said page what?
Page 37.
All right, thank you, sir.
You're welcome. Yes, let's solve this illustration number 3. Let's start with that. Okay. Yes, who is helping us to read it? Illustration 3. Quickly, who is helping us? Now, I can call anybody. In fact, I don't need to be asking you. Let me just call one of you. Since you have refused to do my assignment, then that would be that would be the consequence of your failure to attempt my assignment. Randomly, I will pick anyone that my minds pick. Will read it for us. Mercy, talk to me.
Okay, so I wanted to read.
All right then, thank you. Go ahead.
Kudeto Limited is a pharmaceutical company operating from Enugu, Nigeria. Recently, the company received an order from Enyimba Football Club to produce a technological device for the treatment of glowing, glowing injury. The contract is expected to be complete in 1 year's time at the contract price of 3 million. Currently, the company has
Hold on.
spent.
Hold on, Mercy. So
Okay.
as you are reading, I'll be indicating, I'll be underlining the key variables that we need to solve the question. So in this first paragraph that is just read, I can see contract price.
Yes.
Because I'm given contract price, so there's like one thing that should crop into my mind is that since I'm given contract price, there's likelihood for me to determine profit in this question. So move
Yes,
on.
sir.
And then Mercy, get closer to your speaker so that we can hear you louder.
Okay, sir. Can you hear me now?
Go ahead.
Currently, the company has spent 400,000 on research and development and an additional cost of 250 on market survey to promote the device of other football clubs in Nigeria. The following
Hold on there.
information.
Hold on before you move on. Let me explain that so that we can move faster. Now, in this second paragraph, you are told that the company has spent 400,000 naira on research and development and an additional cost of 250,000 naira on market survey to promote the device to other football clubs in Nigeria. So 400,000 on research and development is a sunk cost because we are told that the company has spent before this special order is undertaking, the company has spent 400,000 naira. So that 400,000 is a sunk cost, is an historical cost, should be ignored. Not only that,
Okay.
the additional cost of 250,000 naira for market survey is also irrelevant. Why? Because it's a sunk cost. All right. So we are going to ignore the 400,000 and then the 250,000 naira. Read on from there. Mercy.
The following additional information relates to the contract. Materials. The contract will require material zinc. This material bought 2 years ago. Sorry, this material was bought 2 years ago at a cost of 600,000. The material is toxic and if not used for the contract, may be disposed of.
Okay. Oh, okay, go ahead.
It may be disposed of at a cost of 50,000 naira.
Yes, let me explain that. You are told that the contract will require material zinc. This material was bought 2 years ago at a cost of 600,000 naira. Again, 600,000 naira 2 years ago. That's a sunk cost.
Yes.
All right? That's a sunk cost. Remember, relevant costs must relate to the future. Any costs that have been incurred in the past is a sunk cost and not relevant to the calculation. However, you are told that this material that was bought 600,000 naira 2 years ago is toxic, and if not used for the contract, it must be disposed of at a cost of 50,000 naira. Here, examiner has given you this material, zinco. Examiner has told you that it will be disposed of at a cost of 50,000 naira. That 50,000 naira represents a saving, all right? It's a saving to the organization, all right? So that's how we're going to treat that material, zinco, all right? So move on.
Labor. Skilled labor is hard to recruit in the labor markets. In the recent management meeting, the sales manager suggested that two workers from the department on a current wage of 400,000 can be transferred to the executive to execute the order. The production manager does not buy the idea because he believes that transferring two of the existing staff to execute the contract will lower productivity. The management resolved that the staff should be transferred since the company is finding it difficult to recruit additional staff. However, if this happens, the management believes that sales will drop by 1.5 million at a marginal cost.
Hello, Messi. I didn't get that. I guess it's network. Maybe it's my own network.
Cost of 1 million naira.
Can you take the
Should I
last
continue, sir?
sentence? Take the last sentence. However,
if this happens, the management believes that the sales will drop by 1.5 million at a marginal cost of 1 million naira.
all right, thank you. So let's interpret that scenario. This relates to labor. And you are told in the question that skilled labor is hard to recruit in the labor market. In the recent management meeting, the sales manager suggested that two workers from production department on the current wage of 400,000 naira can be transferred to execute the order. The production manager does not buy the idea because he believes that transferring the two of the existing staff to execute the contract will lower productivity. First thing first, before we proceed, examiner has given you wages of 400,000 naira. Remember, in my explanation of relevant cost, I told you that I told you to go and read about all those terminologies relating to variable cost, fixed cost, step cost, incremental fixed cost, attributable fixed cost, all those opportunity costs, committed costs, and all of that. Now, when you talk about wages is the same thing as examiner can call it wages or labor, direct wages. All right, these are direct costs. Wages are direct costs. Therefore, when you talk about variable costs, we say variable costs are relevant costs, isn't it? Under variable costs, we have direct material, direct labor, direct expenses, and variable production overhead. These are variable costs of production. So these 400,000 naira, they relate to workers and their current wages of 400,000 naira. Because wage is a direct cost, it's a direct labor cost. Therefore, this 400,000 naira, we are going to account for it because it is a direct cost. But if examiner has used this different name, if this 400,000 naira is called different name, let's say, for example, staff cost, then in that case, we can treat it as not a relevant cost. But because of the fact that examiner mentioned two things here, number one is that they relate to workers. Workers are those they are those that are directly involved in executing this particular contract. They are those people that will directly involved in executing the order. They are different from normal employees that are on a salary basis and monthly salaries. All right. So this 400,000 naira is a direct cost because the workers are directly involved in executing the contract. Therefore, this 400,000 naira is a relevant cost. We are going to account for it. Secondly, we are also told in the question that the management resolved that the staff should be transferred since the company is finding it difficult to recruit additional staff. However, if this happens, the management believes that sales will drop by 1.5 million naira and at a marginal cost of 1 million naira. So something should call your mind in this particular instance. You have been given sales value of 1.5 million naira. You are also given variable cost of 1 million naira. Marginal cost is the same thing as variable cost. All right. So you are given sales and then variable cost of 1 million. So that means you need to determine contribution. So the difference between 1,500,000 and 1 million naira is the contribution that which you are going to consider. 1,500,000 we don't have anything to do with it. The marginal cost of 1 million naira, we don't have anything to do with it. It's the difference between the two we are going to consider, which is contribution loss. Okay, this is contribution loss. In this case, 500,000. So that's how we are going to treat the labor cost relating to this contract. Yes, move on. Mercy.
Production overhead. The fixed production overhead absorbed relates to labor and would amount to 200,000. Research and development.
Hold on. So fixed production overhead absorbed relate to labor and will amount to 200,000 naira. Fixed production overhead is irrelevant. Whether you execute this contract or not, the company will incur the fixed production overhead. So irrespective of the decision taken on this contract, that 200,000 naira will be incurred. Any cost that will not change as a result of the decision taken is irrelevant. Therefore, this 200,000 is not relevant to our calculation. We are going to ignore it. Yes, next item.
Research development staff. It has been concluded that when work on this contract is completed, the research and development department will be shut down. The R&D staff cost for the year includes wages of 600,000. The redundancy and severance pay of 150,000. Severance of pay of 150,000 naira now, or 350,000 naira in a year time.
All right, thank you. So, as a student, you must know how to interpret question, or you must know how to interpret a scenario. In this particular question, you are told that the R&D staff costs for the year includes wages of 600,000 naira. Again, anything that has to do with wages, there's difference between wages and salary. There's difference between wages and salary. Wages is a direct cost. Salary is not a direct cost. Salary is a fixed cost. So you must know how to treat each of them. So if in any question where examiner has given to you wages or direct labor costs, you should know that these are direct costs and they are relevant. You have to consider it. But if you are given salary, it's a different thing. Salary is a fixed cost and should be ignored. Okay, now in this particular instance, you are given R&D costs, R&D wages of 600,000 naira. That 600,000 naira, we are going to consider it. And redundancy and severance pay of 150,000 naira now. If the company wants to pay redundancy fee to the workers, now, that is today, the company will pay 150,000 naira or 350,000 naira in 1 year's time. So, will the company be able to pay redundancy pay? Will the company be able to pay the redundancy fee now? No, the company cannot pay this 150 now because these staff, they are going to work on the contract until the next 1 year. That means we are going to extend, instead of the company to pay 150 now and disband the R&D department, the company will extend it for the next 1 year because the company will need to execute this contract. Therefore, at the end, after year 1, the company will then pay redundancy fee of 350,000 naira. So how much are you going to recognize as severance and redundancy pay as far as this scenario is concerned? 150,000 naira will not be relevant because you cannot, we can't dismiss the R&D department now. So that 150 is out of it. 350,000 naira in 1 year's time. So this 350 is an accumulated cost. So the difference, what is relevant is the difference between 150 and 350,000 naira. Because if the company has to dismiss the department, the R&D department now, the company will pay 150,000 naira redundancy and severance pay. But if it delay for the next 1 year, the company will pay 350. Why did the company delay for the next 1 year? It's because of the contract. Therefore, the difference between the amount of 150,000 naira now and the 350,000 naira for the next 1 year. So the difference of 200,000 naira is what is attributable to this contract. So it is 200,000 we are going to recognize under redundancy and severance pay. So read on, Mercy.
Equipment. The contract utilizes a special equipment which cost 1,000 naira 3 years ago. It has a residual fee of 30,000 naira in 2 years and a current disposal value of 80,000 naira. If the equipment is used in the contract, it is estimated that the disposal value in a year time will be 60,000 naira.
All right, so let's interpret that information on equipment. The contract utilizes a special equipment which cost 180,000 naira 3 years ago. All right, so that 180,000 naira is a sunk cost and therefore should be ignored. We also told us this equipment has a residual value of 30,000 naira in another 2 years. That is, in the next 2 years, the disposal value of this equipment will be 30,000 naira and a current disposal value of 80,000 naira. If the company is going to dispose of this equipment in the next 2 years, the company will earn 30,000 naira. But if the company is going to dispose it off now, the company will earn 80,000 naira. The company will not dispose it off in the next 2 years. And the company will also not dispose it off now, that is the current disposal value. So this 30,000 and 80,000 naira, they are not relevant because the company cannot dispose of in the next 2 years. The company can only dispose after 1 year. Now, so if the company wants to dispose it off today, they are going to earn 80,000 naira. But you cannot dispose of this equipment because you are going to use it for the contract. So you are now told that if the equipment is used in the contract, it is estimated that the disposal value in a year's time will be 60,000 naira. That means we have to delay the disposal of the equipment because if the company wants to dispose of this machine now, today, the company will earn 80,000 naira. But because you want to use the machine you want to use the equipment for the contract, you cannot dispose it off. You have to wait for the next 1 year. Therefore, after 1 year, the company can dispose at 60,000 naira. 30,000 naira is not relevant. 80,000 naira is not relevant. 60,000 naira disposal value is also not relevant. The relevant cost, what is attributable to this contract, is the difference between the current disposal value and the disposal value in a year's time. Because it's because of this project you delay for the next 1 year to dispose of the machine or to dispose of the equipment. Therefore, how much has the equipment utilized in this equipment. It will be different between 80,000 and then 60,000 naira. So please, you have to be open-minded. You have to shine your eye. Performance management is not 1 plus 1 is equal to 2. You must be able to interpret questions. And for you to be able to do this conveniently, you have to practice as many questions as possible so that you see different scenarios and how they are being treated. Yes, Mercy, the last one.
Share of general building service. The contract is charged with 350,000 naira per annum to cover general building expenses. The building space is currently being used for the contract. However, a neighboring business has approached Kudekto Limited to lease the space for 1 year, consideration of 70,000 naira. Required.
Okay, thank you.
Okay.
Hold on. So on this share of general building service, even with the name, with the title on its own, you should know that this is not relevant. Share of general building service. This is more like service charge. Service charge does not relate to the contracts. It's an allocated cost. It's an apportioned cost. So you are told that the contract is charged with 350,000 naira per annum to cover general building expenses. The company has incurred building expenses like electricity, like security, like water and the supplies. All those expenses have been incurred. They now charge these projects. They charge this contract 350,000 naira. So all those costs do not relate to the contracts. It's just an apportionment. These are overhead costs that are apportioned to the contract. Therefore, the 350,000 naira is irrelevant. You are not told that the building space is currently being used for the contract. They are using the space for the contract. However, a neighboring business has approached Scudetto Limited to lease the space for 1 year at a consideration cost of 70,000. Now, this 70,000 naira, the company will not be able to earn it. Why? Because they are using the space for these contracts. Therefore, this 70,000 naira is called opportunity cost. Opportunity cost is the benefit forgone as a result of taking a particular course of action. Since the building space is being used for this contract, the company will not be able to earn this revenue of 70,000 naira from neighboring business. Therefore, the 70,000 naira is relevant. So for share of general building services, only 70,000 naira of opportunity cost will be considered. 350,000 naira will be ignored because it's a general cost. All right, it's not related to the contract, so you have to ignore the 350. Okay, so that's that. Then, Mercy, conclude the question.
Required. Advise the CEO of Scudetto Limited if the contract should be accepted. State any assumptions made in your calculations.
All right, then. Thank you very much. So that is simply the question. Examiner is asking you to advise whether the contract should be accepted or not. Whether examiner asks you or not, when you have this kind of a scenario, it is expected that you are going to state your assumption. You just have to do that. All right? You just have to do that. So you want to advise whether the company should undertake this contract or not. Therefore, you need to determine, you need to carry out incremental analysis by comparing the contract price versus the relevant cost of producing of executing the special order, whether it will result in additional profit or loss to Scudetto Limited. And the examiner is saying you should ignore time value of money. Yes, this is even not relevant to anything because you are not given cost of capital. Why are you telling me to ignore time value of money? All right. So that is the question. So let's solve quickly within the next few minutes. All explanation I've done it. So I will just comment on each of them when we are picking it. All right, let me stop sharing this and move to the working notes. Let me see your messages. Anthony, what do you mean by your finger? I don't understand. You are raising, or you have stopped it? Anyway,
Yes, sorry, sir. I just wanted to
go,
ask, please, can you hear me?
go ahead. Yes.
Okay, all right. Good evening, sir. So I just wanted to ask, is there any
Good.
topic that has all those topics you mentioned the other time, like incremental costs, opportunity costs? I mean, where we can actually read up and probably practice some questions. Of course, I know that relevant costing is a topic on its own. So how about the other ones? Is there any topic that has all of them, in one, so that one can actually read up?
It's in your notes, it's in your study material for under relevant cost. When you see the when you go to your learning material for under relevant cost, you will see those information there. In fact, when I was taking you the notes, when I was taking you relevant costing, I gave it to you as an assignment that you should form a note on those line items. Okay, opportunity cost, committed cost, differential cost, sunk cost. So all of them, I told you to summarize, read it from your learning material, then summarize it in your own class notes. I
Yes,
was
sir.
when I was explaining relevant cost, I gave it to you as an assignment that time. But again, only few of you, I trust you guys. All right. So
I don't think
Tony,
I joined.
it's in your learning material. You will see it there. All right. Just go to the topic, relevant costing. You will see it there. If you also have the golden book, the performance golden book, you see it there in details with examples. All right.
Okay, all right, boss. Thank you.
All right then. So let's solve this. This is solution to illustration number 3, page 37. Is it 37 or 38? Let me confirm. Uh, page 38. Okay. Page 38. The name of the company is Scudetto Limited. Then examiner is asking us, you are asked to advise the CEO of Scudetto Limited if the contract should be accepted. Now, that means examiner is asking you to prepare incremental analysis, whether to accept or reject the special order. All right, so I will then come here. This is A1. There are two things you are going to do in this question. You carry out your economic analysis, then two, you state your assumptions. All right, you state your assumptions. So I would then say acceptance or rejection of a special order. Acceptance or rejection of a special order. It's a contract. Now, you recall earlier today, I mentioned that there are two ways examiner can test you under special order. If in the question you are given selling price or contract price, it means that the company wants you to determine profit or loss arising from the special order. But if in the question you don't have selling price, you don't have contract price, all what you are given are costs, then it means that the company wants to determine relevant costs associated with the special order. So in this question, we are given contract price. How much is the contract price? On the first paragraph, I think 3 million naira. Let me go there. Yes, you are given contract price of 3 million naira. So you are also given other costs. That means examiner wants you to determine additional profit or loss associated with the special order. So I will then come here. I will create two naira signs, one for debit, one for credit. The first item is the contract price. Let's go and read. Let's go back to the question. Okay, Scudetto Limited is a pharmaceutical company operating from Enugu, Nigeria. Recently, the company received an order from Enyimba Football Club to produce a technological device for the treatment of growing injury. The contract is expected to be completed in 1 year's time at a contract price of 3 million naira. So we have a contract price of 3 million naira. This will be on the credit side. Okay, next item. The second paragraph. Currently, the company has spent 400,000 naira on research and development. So we have identified this, the research and development of 400,000, and then the market survey cost of 250,000 naira. We said they are sunk costs. So we don't need to be reading it again. We have agreed they are sunk costs. So when we are stating our assumptions, we have to indicate that. The following additional information relate to the contract. The first item is material. The contract will require material zinco. This material was bought 2 years ago at a cost of 600,000 naira. We said that 600,000 naira is a sunk cost, therefore not really relevant to our calculation. We ignore. The material is toxic, and if not used for the contract, it must be disposed of at a cost of 50,000 naira. And we said that that 50,000 naira represents a saving to Scudetto Limited. So let's put it down. Material zinco. Material zinco saving of 50,000 naira. So this will be on the credit side. Okay. Next. Labor. Skilled labor is how to recruit in the labor market. In the recent management meeting, the sales manager suggested that 2 workers from production department on the current wage of 400,000 naira can be transferred to execute the order. All right. And we said that that 400,000 naira is relevant because it's a direct cost. Direct labor cost. Wage is a direct cost. So you have to consider that. It is relevant. So I will then come here. Direct labor cost. $400,000. This will be on the debit side. It's a cost. Next, let's go back to the question. The production manager does not buy the idea because he believes that transferring 2 of the existing staff to execute the contract will lower productivity. The management resolved that the staff should be transferred since the company is finding it difficult to recruit additional staff. However, if this happens, the management believes that sales will drop by 150,000 naira at a marginal cost of 1.5 million naira at a marginal cost of 1 million naira. And we said that since you are given sales value of 1.5 million and marginal cost of 1 million naira, that means there will be loss of contribution of 500,000 naira. So we then go and indicate that contribution loss. Which is the difference between the sales value of 1.5 million and the marginal cost of 1 million naira. The difference of 500,000 is the only relevant cost we are going to consider. All right, next item. So we are done with that paragraph for labor. All right, production overheads. The fixed production overhead absorbed relate to labor and would amount to 200,000 naira. And we said that 200,000 naira is irrelevant because irrespective of whether this contract is executed or not, the company the fixed production overhead will be incurred. Any cost that will not change as a result of the decision taking is irrelevant. So this fixed production overhead of 200,000 naira is irrelevant. We have to ignore it. Okay. Next item. Research and development uh, staff. Research and development staff. It has been included that when the work on this contract is completed, the R&D department will be shut down. The R&D staff costs for the year include wages of 600,000 naira. So wages is a direct cost. So I will then come here R&D wages 600,000. Okay. In fact, my presentation is, let me redo this. I did not leave a space. This is very poor. Let me readjust this by one line. So I will come here, direct labor cost. No, this should be R&D. R&D, that is wages. Wages is 600,000 naira. Then I will have contribution loss. So that you don't say this is the way Mr. Deji wants to solve it. And then you have to do the right thing. Contribution loss is 1.5 million minus 1 million. So that will give us 500,000. Okay. Then we have direct labor cost. Direct labor cost of 400,000. That's it. So this one will then be for relevant cost. Relevant cost of executing the contracts. So that's the heading of the cost. That's it. Okay. So it's better this way. So let's move on. R&D, we are done with R&D. So let's move to, yeah, we are still under R&D. We also have redundancy and severance pay of 150,000 naira now, or 350,000 naira in 1 year's time. And we said that this redundancy fee is not going to be paid now because this R&D staff, they are going to work on this contract. Therefore, the company cannot dismiss them now. So the company will continue to utilize their expertise. However, the 350,000 naira is not what we are going to consider as part of the severance pay. It has to be the difference between 150 and 350,000 naira. That's what is attributable to this contract. So I would then say redundancy and severance pay. Redundancy and severance. We said this is pay, which is 350,000 minus 150,000. So the difference of 200,000 is what is attributable to the contract in relation to redundancy and severance pay. All right. Next item, equipment. The contract utilizes a special equipment which cost 180,000 naira 3 years ago. And we said the 180,000 naira is a sunk cost. It has a residual value of 30,000 naira in another 2 years' time. And we said that 30,000 naira is irrelevant because this equipment will not be disposed in the next 2 years' time. And a current disposal value of 80,000 naira. We also said that the 80,000 naira is not relevant because the company will not sell this equipment today. Now, they are not going to sell it because they want to use it for this contract. So you are now told that if the contract is used in the if the equipment is used in the contract, it is estimated that the disposal value in a year's time will be 60,000 naira. Therefore, how much if you want to dispose this equipment now, the company will earn 80,000 naira. If you delayed it because of this contract for the next 1 year before you dispose it off, the company will earn 60,000. Therefore, how much is attributable to this contract? It will be the difference between 80,000 and then 60,000. That's what you are going to charge to this contract. So I would then say equipment, which is 80,000 minus 60,000, 20,000 naira. The last item there, general share of general building service. The contract is charged with 350,000 per annum to cover general building expenses. And we said that that 350,000 naira is irrelevant because it's an allocated cost. It's just like a service charge, all right? All those costs that are usually incurred in servicing a building, all right? You know, in your office building, they usually have general costs that will be incurred and then allocated to each department within the organization. So this is the same kind of cost that you have here. So this 350,000 naira is not a relevant cash flow. So we have to ignore it. It's not relevant. The building space is currently being used for the contract. However, a neighboring business has approached Scudetto Limited to lease the space for 1 year at a consideration of 70,000. So because the building space is being used for this contract, the company will not be able to earn the 70,000 naira from neighboring business. So that is what is known as opportunity cost, the benefit forgone as a direct consequence of the decision taken. Therefore, I would then come here, uh, building share of general building services. Share of general building services. And we said this is opportunity cost because of space. Let me put it there. Opportunity cost. Don't do this on the day of your exam. In fact, let me just rewrite it. I don't want to hold me accountable for anything. Just put opportunity cost there. Or you put general share of general building service, however you want to put it. So opportunity cost 70,000 naira. Okay. So what else? I think that's the last figure there. Let me check. Yes, requirement is the next one. So at this point, let's add up all the total relevant costs of executing the contracts. Let's add it up. What do you have? Give it to me. Yes, add it up. What do you have?
$1,790,000.
1,790,000. Thank you. All right, so this is a cost. So we then less from 3,050,000 What do we have? So that will be additional profits. How much is the additional profits?
1,260,000.
1,260,000 is the profit. So examiner is now asking you in the requirements to advise the CEO of Scudetto Limited if the contract should be accepted. So because the contract produced a because the contract produced a profit, then it should be accepted. I would then say the CEO or the contract should be accepted. Considering the additional profits of 1,260,000 naira. So that's that. This is not the end. We then need to state all our assumptions. There are some figures in the question whereby you ignore them. Why did you ignore? So you have to state it. So A2, assumptions. The calculation above is based on the following assumptions. Okay. The calculation above is based on the following underlying assumptions. Let's move faster so that we can complete this question. The next one, we still have one more. So number one, we then go back to the question. What's the first item in the question? We are given material. No, we are given research and development costs as well as a survey. Yes, Boluwat, Gabriel, what's your question?
Hello, sir.
Yeah, talk to me.
I understand, but I didn't understand the rationale behind deducting when we in the research and development when we conclude that we are going to use the several benefits. We are now deducting the 350 minus 150. What is the rationale behind deducting for and deducting it from each other before we got 200 and the equipment too? Why we deduct the 80 minus 60, 60 minus 80 and we got 20? Why are we deducting it from? I didn't understand
Okay,
that part.
let me explain. Now, let's go back to you mentioned the last two additional information, which is R&D staff cost and then equipment. Sorry, the third to the second to the last additional information. Now, let's start from the R&D staff cost. You are told that redundancy and severance pay of 150,000 naira now. Pay attention, Gabriel. If you are told in this question that it has been concluded that when the work on this contract is completed, the research and development, they are going to shut down R&D department. When are they going to complete this contract? In 1 year's time. Hope you are paying attention, Gabriel.
Yes, sir.
So the contract will be disbanded in a year's time. So that means the R&D department will be shut down in a year's time. You are now told that redundancy and severance pay 150,000 naira now. So you pay when you close a department, the staff that are supporting that department, you compensate them, isn't it? That's essence of redundancy and severance pay. Now,
Yes, sir.
so this 150,000 naira now. So are you disbanding? Are you closing? Are you shutting down the R&D department today, Gabriel?
No, no,
No. So that means that 150,000 naira is irrelevant since you are not shutting it down because the staff, the R&D staff, they are still going to work for this contract for the next 1 year. So examiner is now telling you, or it's either you pay them 150,000 naira now or you pay 350,000 naira in a year's time. So in a year's time, the cost has increased from 150,000 naira to 350,000. You are not paying them 150,000 naira now because they are still going to work on this contract. Therefore, that 150,000 is out of it. Or you delayed it in the next 1 year. So you can't pay them the entire 350,000 because the cost you are supposed to pay them now is part of the cost that you are going to incur in the next 1 year, which is 350. So that means how much how much is attributable to this contract in relation to redundancy and severance pay. Why did you delay? Why didn't you pay them the 150,000 naira now? Why did you delay for the next 1 year? It's because of this project. Therefore, how much of this redundancy pay will be attributable to the contract is 200,000 because it will be cheaper to let those R&D staff go now and the company will pay only 150,000. But if you delay for the next 1 year, you can't pay them 150,000 naira because they have work additionally. Therefore, you need to increase the cost, and the cost has increased to 350,000. Therefore, the difference between the difference between 350 and 150,000 naira is the actual amount that is attributable to this contract. This 150,000 naira does not relate to this contract at all. What relates to this contract is 200,000 naira, which is additional 200,000 naira on top of 150,000. Now, Gabriel, I believe that is clear before I move to
yes,
equipment.
sir.
So the same thing happens to equipments. You are told that the contract utilizes a special equipment which costs we already agreed that one is irrelevant. Now, you are given a residual cost, a residual value of 30,000 naira in 2 years' time. You can't wait to the next 2 years before we dispose it. That 2 years, that 30,000 naira is irrelevant. We ignore it because this contract will be completed in the next 1 year. So the disposal value in the next 2 years is irrelevant. So we have ignored that. Now, examiner now told you that a current disposal value of 80,000 naira. If you want to dispose of this equipment now, the company will earn 80,000 naira. Are you going to dispose of the equipment now,
No,
Gabriel?
no,
No. Why can't you dispose it off now? It's because of this contract. Because you are going to use the equipment for additional 1 year. So after 1 year, this equipment will now be disposed of for 60,000 naira. So if they're now asking you technically how much is attributable to this contract in relation to equipment, it is not 80,000 naira because if you want to dispose it off now, that now the project has not begun. So that 80,000 naira is not relating to this contract at all. So the contract does not allow the company to dispose it off now at 80,000 naira. You have to delay for the next 1 year, and the value has dropped by 20,000 naira. If you want to dispose it off now, the company will earn 80,000, but you delay for the next 1 year, the value dropped to 60,000 naira. So lost in value is 20,000 naira. So only 20,000 naira is relevant to is attributable to the project on this
okay, sir.
equipment. I believe that is clear, Gabriel.
Yes, sir.
Yeah. So Nii, talk to me quickly.
Good evening, sir.
Good evening.
Oh, sorry, sir. Sir, I want to know why you are using what's it called absorption in this case, because I could remember the last two short-term decisions we've treated so far, the make and buy and the first one that we treated. we didn't do assumption. Instead, what we did was to write to write the rules of the
The
assumption of
qualitative
the
factors.
short factors.
See, like I told you, in any question, see, you can see in this question, you are given several information. Why did you ignore some and you use the other ones? So the scenario of those ones we solve under make or buy and as well as deletion of a cell is different from this one. Even other make or buy, we stated our assumptions. If you remember the question we solved, the question on divine grace,
Ọjà tó rà dà.
you remember? Hello?
Lẹ́yìn pé mo mọ̀ ẹ́ fi ní kó máa lọ.
Yes, sir.
Everybody is cool.
Who is that person? Ibrahim,
Yes, sir.
where are you going? You are mute yourself, you are distracting in class. Ibro. So, Niyi, if you go back to the last question we solved under make or buy decision, you will realize that we stated our assumptions on the first question that was it first or second? On the second question we solved on divine grace, the question that involved time value of money, where we use cost of capital. So it depends on the question. You can see here that there's no way you can't just state your you can't just do your calculation without stating your assumptions. Why did you ignore research and development cost? Examiner wants to know. Why did you ignore market survey cost? Why did you ignore the material zinco that was bought 2 years ago at 600,000 naira? You can't just do your calculation without stating your assumptions. You can never earn your full mark if you do that. Is it clear now? Niyi.
Yes, sir. Yes, sir. Thank you, sir.
All right, then you are welcome. So at all time, you just have to, whether examiner asks you or not, you have to state your assumptions. You just have to state your assumptions. Yes, Rahman, talk to me.
Good evening, sir. Sorry, in that
Yeah.
the last question, just like my brother asked now, there is notes. I think I was not there to the end of the lecture, but when I look at the video, the notes given to us, as in the working notes, there was no assumption stated for that divine grace.
We
I don't
stated
know.
this. I think it's maybe it's somebody, the person that edited the video, he cut it off. We did it in the class. Maybe you did not wait till we finished the
I
class.
think
We did
I
it in the
didn't wait
class.
to finish.
Yeah, I noticed that too. I noticed that when I listened to the video, when I noticed that that section was cut off. I will relate with the person to find out why. Hopefully, he has not deleted the original version. Yeah.
Okay, all right.
But in any
Okay.
case, what I will do is I will share with you. If I remember at the end of this class, I will share. All right. I will share the sorry, the assumptions. Yeah.
Okay,
Okay.
thank
Yeah, welcome. So research and development, let's quickly so that we can complete all the questions we want to solve for today. Yes, which one am I? Okay, we are talking about research and development and then market survey. And markets of R&D and markets survey. So what's our assumption here? We then say the R&D and market survey costs, the R&D costs of how much is that? I think 400,000, is it? Yes. The R&D cost of 400,000 naira and market survey costs of 250,000 naira are sunk cost and not related to the calculation. So that's our assumption on that. Next one will be number 2. We're also given material zinco, which is 600,000 naira. Why did we ignore the 600,000 naira? So let's state it. Number 2, material, the cost of material zinco of 600,000 naira, bought 2 years ago is a sunk cost, and therefore not relevant to the calculation. So that's our assumption on that. So we have said that the 50,000 naira represents a saving. We can then say only the disposal value of 50,000 naira which represents a saving to Scudetto is relevant. Okay. Next, labor. Labor costs. Number 3, the direct labor or the direct wages of 400,000 naira is included in the calculation because it is a direct, let me see the wages, let me put it this way. The wages of 400,000 naira, the current examiner call it current wages. The current wages of 400,000 naira is included in the calculation because it's a direct labor cost. Okay. We are also told that we also have a contribution loss. In addition, a contribution loss of 500,000 naira is attributable Let me put it this way. How do you arrive at 500,000? So the contribution loss, I didn't even put loss. The contribution loss of 500,000 naira representing the difference between the sales of 1,500,000 and marginal cost of 1 million naira. Marginal cost of 1 million naira. I said, in addition, a contribution of 500 representing the difference between is attributable to the contracts. Okay. What else? The next one is production overhead. We said the fixed production overhead of 200,000 naira is irrelevant. So production number 4. Production overhead the fixed production overhead of 200,000 naira is not relevant to the calculation, and this has been ignored. Why is it not relevant? Because the fixed overhead will be incurred irrespective of the decision taken on the contracts. Whether you undertake this contract or not, the fixed overhead will be incurred. So any costs that will not change as a result of the decision taken, we said it is not relevant. That's why we ignore the 200,000. Number 5, research and development. Okay. R&D staff costs. R&D staff costs. Okay, so in that scenario, we are told that R&D staff costs for the year include wages of 600,000 naira. The wages of 600,000 naira have been considered in the contracts. However, Ibrahim, be careful. Don't try the third time. You've done it twice now. However, a redundancy pay of 150 and 350,000 naira are not relevant. Let's put it down. However, a redundancy and severance pay of 150,000 naira and 350,000 naira are not relevant to the calculation. Only the difference of, or the only relevant cost is the difference. The only relevant cost attributable to the contracts is the difference of 200,000 naira. That is 350,000 minus 150,000. Okay. Number 6. Remember what I told when we had relevant costs, relevant costing. I told you the additional information. I told you that qualitative factor, assumptions is not something that you are going to fabricate. It's already there in the question. So examiner is just asking you to explain how you come about your figures. So the next item is the equipment. Equipment. Just tell examiner how you have arrived at your figure. That's all. So what assumption did we make under equipment? We said that the special equipment cost of 180,000 naira 3 years ago is a sunk cost. So the special equipment cost of 180,000 3 years ago is a sunk cost and not relevant to the calculation. Okay, so what did we now do? So the only relevant cash flow is 20,000 and also the residual value of 30,000 naira. Let's put it down because of time. The only relevant cash flow, or let's put it this way, the disposal value of 30,000 naira, 80,000 naira, well, because of time, let's just remove all these ones. The only relevant costs, the only relevant costs arise or associated with the disposer of the equipment is loss in value. Is a loss in value of 20,000 naira, representing the difference between 80,000 naira and 60,000 naira. We have two more. Share of general building services. So we said the 350,000 naira for general building services is irrelevant. Number 7, share of general building services. The amount of 350,000 naira of general building services charged to the contracts is irrelevant. Irrelevant. And therefore ignored. However, an opportunity cost of 70,000 naira is attributable to the contracts. The last one is oh, that's it. Okay, so that's end of the question. That's end of the question. So let's quickly have one more illustration so that in our next class, we are moving to a brand new topic. All right, so let's have one more illustration on this. Let me quickly stop sharing this. I'll be the one to read it so that we can quickly solve it. Which question is that? Okay, let's solve illustration number 2. Illustration number 2 has to do with, no, I've changed my mind. This illustration number 2, you are the one that will solve it. This will be the assignment. Solve illustration number 2 as an assignment. So let's solve the illustration number 2 is related to the one we just solved, which has to do with profit. So I don't want to solve the one that has to do with profit again. So you are the one that will solve this illustration number 2. So this number A has to do with minimum price. Okay, so that's the one that we are going to solve now. So you are going to do illustration number 2 as an assignment. So you will use the example that we just finished solved. So you are going to use that one as an example or as a clue to solve this illustration number 2. This is very straightforward. All of you should be able to get it 100%. So let's solve this illustration number 1. Let me see. Ibrahim, are you still there? Is it? I can't see. I'm not
Let me
sure
read it.
it's
Let me
okay.
read
Thank
Prof.
you. Go ahead.
So the Conco Below Limited receives a special order to supply 2,000 units to Lagwaja. The order will utilize the available idle facility that was purchased 6 years ago. At the time of receiving the order, the net book value of the idle facility is 2 million naira, while the market value is 1.2 million. If the machine is utilized for executing the order, its market value would drop to 1 million naira. The order will take 2 months to complete. The order will require material ABC. The order will require material ABC for 150,000 naira for 4 years. 4 years ago, it is identified that material ABC can also be put into an alternative use at a cost of 60,000 naira, while the current market value is nil. The order will require 4 casual workers at a monthly remuneration of 8,000 naira each, and the service of a supervisor that currently earns 40,000 naira per month. The supervisor is to utilize 60% of the normal time in working to execute
Yeah.
I think that should be execute,
It's a
right?
typo.
Execute
Yeah,
the order.
yeah.
To execute the order. All right. Management ascertained that the business will suffer a monthly contribution of 80,000 naira if the supervisor is to transfer 60% of the working time to executing the new order. The supervisor is equally to be paid a monthly bonus of 10,000 naira because of the additional efforts needed to achieve on-time delivery. At present, monthly maintenance cost of 25,000 naira, while that of administration is 20,000 naira. If the order is accepted, the two costs will increase to 25,000 naira and 28,000 naira respectively. Required. A, determine the minimum price to accept for the order. B, state the basis you adopted for your computations. Show
Thank
all
you very
workings.
much. Yeah, thank you. So that's the question. Examiner is asking you in the A part of the question to determine the minimum price to accept for the order. So I told you when we had questions, when we discussed the concept of relevant costing, I said that anytime an examiner asks you to determine minimum price or uh, you have to determine the minimum price to quote for a contract, what the examiner is simply asking you is to calculate relevant cost. All right. So you can see in this question different scenarios. So, and then you are asked to determine minimum price to accept for the order. You want to know whether this order should be accepted or not. So your decision whether to accept it or not, examiner did not, you are simply has to determine the relevant cost. So without wasting more time, so I need you to open to the question at your end. Then let's quickly solve the question. So illustration solution to illustration I think that's illustration number 1. That's page 37. The name of the company is Conco below. Let me confirm. I think so. Yeah, Conco below limited. Conco below limited. Number A, requirements. You have to determine minimum price. You can say determining or calculating minimum price. To accept. All right, so let's go back to the question, scenario by scenario. In the first paragraph, you are told that Conco Below Limited receives a special order to supply 2,000 units to Lagbaja. The order will utilize the available idle facility that was purchased 6 years ago. At the time of receiving the order, the net book value of the idle facility is 2 million naira, while the market value is nil. So while the market value is 1.2 million, this idle facility was purchased 6 years ago. And then as at the time of receiving the order, the book value is 2 million naira. If the company wants to sell the idle facility, they are going to earn 1.2 million. So the disposal value is currently 1.2 million. If the machine is utilized for executing the order, the market value will drop to 1 million naira. So in that case, how much is attributable? How much is the idle facility is attributable to this contract, to this special order? That would be 200,000. That is, the current market value of 1.2 million has dropped to 1 million naira because you have utilized the machine. You have utilized the idle facility for this contract, for this special order, and the value has dropped to 1 million naira. So what made the value to drop is because of this special order. Therefore, the difference of 200,000 will be attributable to the special order. So I would then say idle facility loss in value, which is 1.2 million minus 1 million. And that produces 200,000. So 200,000 will be attributable to the special order. Next item. Second paragraph. The order will require material A, B, C bought for 150,000 naira 4 years ago. That 150,000 naira is a sunk cost and not relevant to the calculation, so we ignore it. It is identified that material A, B, C can also be put into an alternative use at a cost of 60,000 naira, while the current market value is nil. So material A, B, C. So then come here, material A, B, C, alternative use, 60,000 naira. All right. Where do you get the material? You can ask from the group now. Somebody will share with you. It's already, I think I shared recently. And Mary, you would have, I think I have shared the material with you personally. Anyway, so you can ask from the PM group. Somebody will share with you. Or maybe after my class. Then, yes, the next paragraph, the third paragraph. The order will require 4 casual workers at a monthly remuneration of 8,000 naira each, and the service of a supervisor that currently earns 40,000 naira per month. First thing first, let's determine the casual workers. So I will then come here, casual workers. So we are told that 4 casual workers, 4 multiplied by 8,000 naira, each of them will earn 8,000. And for the next 2 months that this contract will last, or that this special order will last. So that will give us what? That should be 64,000, right? That's 64. Okay. Next,
Okay.
supervisor. The salary of supervisor of 40,000 naira is irrelevant. We have to ignore it. The supervisor is to utilize 60% of his normal time in working to execute the order. Management ascertains that the business will suffer a monthly contribution of 80,000 naira if the supervisor is to transfer 60% of his working time in executing the new order. The supervisor is equally to be paid a monthly bonus of 10,000 naira because of the additional effort needed to achieve on-time delivery. So let's consider that. Supervisor salary of 40,000 naira is not relevant, but we are told that if the supervisor transfer 60% of his working time to execute this special order, the company will lose contribution of 80,000 naira per month. So contribution loss, 80,000 multiplied by 2 months for this special order. That will give us 160,000. We're also told that the supervisor will equally earn a bonus of 10,000 naira in order to ensure on-time delivery of the order. So 10,000 naira per month. And we have 2 months to execute the order. So this should be 20,000. Next item. At present, monthly maintenance cost is 25,000 naira, while that of administration is 20,000 naira. If the order is accepted, the two costs will increase to 35,000 and 28,000 respectively. This is what is known as incremental cost. The current costs of 25 and 20,000 naira are irrelevant. Only the change, what has taken place, the differential cost, the incremental cost is what we are going to consider. So we then say incremental cost under the incremental cost, we have maintenance. Maintenance cost has increased from 25,000 naira to 35. So 35,000 minus 25,000. That's 10,000 naira per month multiplied by 2 months for the period of the contract. So that will give us 20,000 naira. Then we also have admin. Administration costs also increase from 20,000 naira to 28,000. So 28,000 minus 20,000 naira for the 2 months. That will be 16,000 naira. What else? I think, yes, that's it. That's it. It's as simple as that. If you know relevant costing, you are good to go. So at this point, we determine the total minimum price. Add it up. What do you have for me? What's the total? Total minimum price. What do we have?
540,000.
540,000. Okay. 540,000. So examiner is asking you in the question to determine the minimum price to accept for the order. So you then say the minimum price that Conco below limited should accept for the special order is 540,000. Remember, this 540,000 does not include the margin, the profit margin or profit markup. All right, but we are less concerned with the examiner did not ask you all of that. Okay, so that's that. Then again, you can never earn your full mark if you don't state your assumptions. So number B part of the question, the examiner is asking you to state the reason why you included some figures and you have to state the basis you adopted for your calculation. That is, you state all your assumptions. So I can then say assumptions. I have to be fast in this assumption. The first one is idle facility. Idle facility. What assumption did you make? Let's go back to the question. Remember, assumption is not something you fabricate. It's already there in the question. Just tell the examiner how you come about your numbers. So the idle facilities, the net book value of the idle facility of 2 million naira is irrelevant. Okay? The net book value of the idle facility of 2 million naira is irrelevant because it's an historical cost. It is because it is a historical cost. However, the reduction in value, the reduction in market price, in market value of 200,000 naira, that is 1,200,000 minus 1 million naira has been included in the calculation. Okay. Number 2, what else? The second paragraph, we said that the material ABC bought 4 years ago of 150,000 naira is a sunk cost. Material ABC. So the cost of material ABC bought 4 years ago is a sunk cost and not related to the special order. Okay. What did we then do? Only the alternative cost. Only the alternative cost of 60,000 naira is included in the calculation. Number 3. What's number 3 saying? The order will require 4 casual workers, blah, 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 and then we ignore the supervisor's salary. All right. So let's comment on supervisor salary. Supervision. The supervisor salary of 40,000 naira is a fixed cost. Is a fixed cost and therefore not relevant to the calculation. Only, what did we then do? We have considered the contribution loss and bonus. Okay. Only the contribution loss. Only the contribution loss of 80,000 and bonus of 10,000 naira per month. Per month is attributable to the special order to ensure on-time delivery. What did the examiner call it? To achieve on-time delivery, okay? The number last, incremental cost. Number 4, incremental cost. The maintenance cost of 25,000 naira and admin cost of 20,000 naira are not relevant to the calculation. The incremental costs, the incremental cost of 10,000 naira for maintenance and 8,000 naira for admin. For admin I've been for admin per month. I've been included in the calculation. So it is only when you do this, you'll be able to earn your full mark. You are rest assured, 15 marks. You can easily pocket it. Yeah, that's the end of the question. That's the end of the question. So let me know if you have any question for me so that we can close the class. Any question on this last question we just solved or any other one? So don't forget what I told you. Go and attempt illustration number 2. That's an assignment. Bosin Limited, illustration number 2, page 37. Go and attempt it and submit not later than Thursday next week. All right. If you submit 12 a.m. Friday, I will not accept from you. All right. So, in the absence of no further question, I want to say thank you, every one of you, for waiting behind for this moment. And we are going to meet again by the grace of God next week. Then I want to encourage you, please. Our next topic will be optimal product mix decision. Okay, our next topic will be optimal product mix decision. Therefore, I want you to go and read, go and study optimal product mix. Go and study optimal product mix. That's the next thing we are going to be doing in class. And this particular topic will take us for the next 2 periods. We are going to spend the next 2 periods to dissect optimal product mix. So again, I'm repeating it now. Go and study optimal product mix. All right. So that will be the next thing we are going to do in class. All right. So I think somebody was raising hand the other. Gabriel, you wanted to say something?
Yes, sir. That is what I want to ask. That which topic are we going to?
Oh, okay. It's all right. So we are doing optimal product mix next. Okay. So thank you, everyone. I will see you next week by the grace of God. Bye-bye.
All right, thank you, boss.
You're welcome.
Thank you, sir.
You're welcome.
Thank you, sir.
All right. Good night.
Good night, sir.
Yeah, good night, bro.